Hello and welcome to our live stream. Good morning, good afternoon, good evening, depending on where you are in the world and when you're tuning in to this live stream. We really have a lot of fun on this channel, and oh my God, talk about fun month. What a freaking ride. I'm ready to get off this roller coaster. I don't know about you, Nicola. So I'm Teresa. I'm here with my colleague, Nicola. On Conscious Crypto Trader, we not only bring you technical analysis, but we talk a lot about mindset and different scenarios that might affect the price action of Bitcoin, including Elon Musk putting out a tweet at the exact precise moment that the market is breaking out. Those are all scenarios that we talk about on this channel. So without further ado, we would love it if you would scroll down, give us a thumbs up, hit the subscribe button, hit the notification bell, and click all. And let's dive right in. You can take us into some technical analysis, Nicola.
Sure. Well, guys, we've got an action-packed day for you today. We might be seeing a pump or a dump, which is consistent with we're at the zenith of Mercury retrograde. So we're at the zenith. It's in Gemini. So we're at the zenith of this contrarian nature of this Mercury retrograde. And that's what we're seeing playing out in the charts. We've got bullish divergences. We've got bearish divergences, right? We've got death cross, and yet we've got bullish patterns. So how on earth do you trade that, and what mindset should we have as we trade it? We're going to go over all of that as we take you through technical analysis for Bitcoin, looking at concepts of stop losses, how to deal with stop losses and volatility. We're going to go into Ethereum, XRP, and also ADA.
And then theme being you trade it very, very carefully.
Yeah. So we'd love for you to say hi. We've got Rochelle here. Great, Rochelle. Nice of you to join us. And I'm just going to go over to the charts. We're going to get started because I don't know if you are following the CME, which is the Chicago Mercantile Exchange, which creates gaps in the price of Bitcoin as it closes on Friday and the Bitcoin price opens at 4 o'clock US Mountain Time on a Sunday. If there's a price discrepancy between open and close, it creates a gap. So if you look on this chart here, we see that there is a gap here that was created with the price differentiation. I've circled it here, and it went from 36910 and then all the way down to 36205. Now, CME gaps usually get closed out sooner rather than later. They don't all get closed out, as you'll see in a moment. But normally, the majority of the time they get closed out, which means when we open trading on Sunday, when the Asia Pacific markets come into their trading and the institutions start trading, and the CME opens again at 4 o'clock US Mountain Time, you can often see the retrace back. In this instance, we actually saw a dump and then a pump, and this morning we traded exactly as one of our favorite technical analysis, Carl from the Moon, says, exactly. It hit it exactly, and it closed it, got rejected off. We went all the way up to, what did we go up to? 36,950. Got rejected off of there and has bounced back down. And then where are we going to from here, right? Is there anything you want to say about that, Teresa, before I go to the daily?
Yeah, I love looking at CME gaps. That's one of the things Peter, one of our scenario champion mastermind members, has been really studying. This is CME gaps. And the majority of CME gaps close by Wednesday. So if you haven't seen it close on the Monday or Tuesday, there's really good odds you're going to see the close by the Wednesday. In fact, the majority close on the Monday. The next highest day is the Tuesday, but if you haven't seen it by Tuesday, super high odds you'll see it by the Wednesday.
Yeah.
So I think this it was a reasonably solid predicted move that we would see this gap close today because we hadn't seen it in the earlier part of the week.
Yeah. And one of the things we want to bring to you on our channel are the scenarios that can affect price action, because there's fundamentals, then there's technical analysis, but then there are scenarios that can affect whether that technical analysis, the probability of it is going to go one way or the other. And CME gap is one scenario. We're in Mercury retrograde. We're at the zenith. That's another scenario. But today also apparently Mars did something, and I'm not really big on astrology, but I am observing it because W.D. Gant, who was a world famous, very successful trader in the stock market, what was the quote that he said, Teresa? Do you want to?
Yeah, he said successful traders don't use astrology. Really successful traders use astrology.
Yeah, something like that. Yeah,
And,
exactly.
yeah.
Yeah. So Mars is the planet of drive. So Wednesday, we often do see some drive in the market in the morning when the New York Stock Exchange opens. We often see a bit of a flurry to the upside, which is exactly what we saw just as we came into the open. Look at this, boom, shot up, touched, closed the CME gap, and now it's come back down, and we're just looking at what we might do. Just as a matter of interest, if we go over to the daily, we have some CME gaps that have not closed sooner rather than later. There'll be gaps that end up getting closed later to the upside between 46,680 and 48,935. And then another one up here at 57,600 and 60,000. I'm missing a zero there. I have to fix that. So these remain unclosed. So these are the later ones, right? Now let's have a look to the downside, because we still have some indicators that the market is, or Bitcoin at least, is heading down. And there's a CME gap between 24,940 and 26,550, 540. So if that scenario that we do break that 30,000 support line and then maybe wick down to 29,000 and come back up and then go bullish, that's cool. But if we do hit that scenario when we come back down to the downside and break that support, we could be coming all the way down to 25,000, or in this instance, 24,940 to close this CME gap. There is another one at 19,360 and 18,000 to 18,110. I personally don't think we'll close that one. And the reason I say that is because every year people say this time it's different, Bitcoin's not going to follow the same pattern, and then hindsight shows us it followed patterns exactly. And one of the patterns that Bitcoin follows is that once we go into the next cycle of a bull market, we don't return back to the all-time high of the last bull market, which sits at 19,536, I think, something like that. Yeah. So if we go back and touch that and go back up, that would be awesome. But if we break it, that would be breaking with how many cycles? Four bull market cycles. That would be
first time ever for Bitcoin. Yeah.
First time ever for Bitcoin. Yeah. So I'm not waiting to buy Bitcoin with fiat currency till it gets to 19,000, because it just might not get down there. We might fall short of it, which is what Bitcoin often does in the dumping.
So and it's important to remember with the CME gaps that the reason they close is that big industrial traders, or big institutional traders rather, have contracts open, and they close the gap to let those agents that still have large contracts open get their contracts closed, right? And so the longer a gap is open, the more likely it is that those institutions have just written those trades off.
Yeah.
Right. So, when we're starting to look at gaps that are months old, often they do end up filling again, but it may not be for the same reasons that a gap would fill within the first week of, the gap being created on the CME.
Yeah. So for those of you who have just tuned in, we have just said that we had a little bit of a rally in Bitcoin this morning, and it went to close the CME gap that was created between Friday and Sunday trading. on the Chicago Mercantile Exchange, and that they close sooner rather than later. So where are we going to go to now? Teresa, do you want to show the divergences that we've got? Because we're at Mercury retrograde, Gemini, contrary, up, down, I don't know, I'm confused, right? So there's more of that. It's like everywhere we're getting bullish signs and then bearish signs, which is that whole Gemini thing. And by the way, guys, for those of you who haven't liked us, we're a new channel. We are really excited about what we're doing, and we would love your support by liking our video and posting comments, saying hi, letting us know that you're there and that you're really enjoying the content that we're giving, because we do put a lot of time and effort into it to bring it to you.
Yeah, I don't think I can remember a month where there were so many contrarian indicators at once, right? And the one really, really good trade we all thought we had, we had this beautiful big triangle building, clear breakout, had come back to retest the support. I can just imagine, just as everybody's putting in their longs, and Elon Musk puts out a tweet about Bitcoin, I'm breaking up with you, right? So there are scenarios that even when all the indicators are in your favor, scenarios that can dump the market in the other direction. Apparently billionaires putting out tweets is one of them, right? But here's some contrarian indicators we've got right now. This is looking at the daily charts for Bitcoin. We've got a bearish divergence on the highs, right? So here we've got the market is making lower highs, but the RSI is making higher highs. At the same time, the market is making lower lows and the RSI is making higher lows, which is a bullish divergence. So which of these two divergences are we going to pay attention to, right? So we're still trading downwards on the RSI though, in this, like on the daily, in this really massive downward channel. We very, very briefly broke the support of it downward when we saw that huge dip down to 29,000 when we had the massive market dumping scenario. But we still continue to trend downward in a narrowing wedge on the RSI. And although normally we're trading charts on the candles, it's also appropriate to draw support and resistance lines on the RSI or the stochastic RSI for that matter, because when you then break out of that pattern, usually there's a really, really big move coming. So we might see that we are trading sideways for a little bit more, even though normally the zenith of the Mercury retrograde would be the turnaround point that we would see between, when we were trending bullish and when we would start to trend bearish. We might not see that in this case because there's so many other factors at play.
But you know what that says to me though, Teresa, as I'm looking at that? I'm looking at that. So you see right at the start there of the bearish divergence on the RSI. While all that was happening, we were just going up and up and up and up in that rising wedge there, right? So we were being shown early on that we're going to have a massive correction. And then because we're right at the bottom and it's narrowing and it's tightening, that tells me that there probably is still more downside to come, but possibly not the big dip and the big dump that everybody is expecting.
Yeah, really good point, because all of these points here represented a pretty massive bearish divergence.
Yeah.
So we could see this correction coming in the charts, here's where the divergence first started to show up, right? Yeah. So
that was February, yeah?
All the way back to February, we were starting to see signs of a divergence this big, and it was also showing up on the weekly, just as most evident on the daily. So, that's really important to pay attention to. And so, at those times we were like, well, okay, was this correction here the playing out of this divergence? And was this correction here the playing out of this divergence? But when you start to see a trend line this big that is being respected, this goes all the way back to January where the trend line starts, right? The market is coiling up for a big move. Yeah. Although the move might not happen for, another week or months into the future, but I don't think we've seen the end of this bull run. I think that's, it's largely the consensus amongst a lot of the experts in the industry, although not everyone. There are people who are bearish right now who think the bull run's over. Yeah. But
which doesn't make
definitely
sense.
coiling up for something big. Yeah.
Exactly, which doesn't make sense because we're not even a year out from the halving. The halving was the 12th of June, and we're 2 days away from the halving, which means that this is a year cycle, and we usually get 18 months to 2-year cycles in the bullish
That might be a
market.
good point to pull up our rainbow chart. Do you want to talk about the rainbow chart?
Yeah, do the rainbow, and then we'll go into Bitcoin, Ethereum, XRP, and we'll look at stop losses and how to be approaching stop losses.
Cool. I love the sense of humor of these guys that they name their, if we're in the blue, basically a fire sale, right? Well, and I especially love the name for this middle zone. We're in the yellow. We're right in the middle zones right now. When you look at the logarithmic scale, they call this one HODL. And I think they mean it, right? Hold on for dear life. Because when you're in these middle zones, you don't know, are you going up, are you going down? Are you going up, are you going down? Are you going up, are you going down? So I actually really think, Nicola and I have both been talking about this a lot. This is kind of one of those zones you might not want to be trying to hold off onto trades multi-days or keeping your trades open because you're hoping it'll go bigger or whatever. This might be the zone you get in and get out and be happy that you took profit. Get in, get out, be happy that you took profit. So you really have to decide what's your approach to risk management on when you're in a zone like this where there is a lot of contrarian indicators, because the market can turn on you so freaking quickly. It's very easy to mess up your risk management in a scenario like this.
Absolutely. So let us go over to Bitcoin. And I have cleaned up my chart for you. The one I use looks like this. Boom. Pick up sticks. But for you folks, I have got a brand new one, which I have cleaned up. So have I done that? No, here it is here. And we can start from scratch, right? So if this is Bitcoin on the daily, which I
always tell women's charts because we have like blue
colors,
or pink or yellow.
And
men's charts are always black. Right?
This is the 100-day moving average, which we're currently under. So we are, this has been a triangle, right? This has been a triangle that everybody has been drawing, that we are still 1, 2, 3, 4, 5 days away from a potential dump on the Ichimoku. Now that could change because Ichimoku is dynamic, right? But we could still be trading within these lines, doing higher lows and lower highs for a few more days yet. Might not. We could break out today. Basically, we could break out any time from now till the end. But this is showing we've got another week of this contrarian action. So it's always good to zoom out, right? And then the technical target for this is, if we do the symmetrical triangle, widest wedge is, depending on where it breaks out, is 20,976 if we break out there. But if we end up breaking out today or what have you, obviously it's going to be lower and it's going to come down to 19,776. And again, if it broke out tomorrow or today, it could come back down to the all-time high of the last market around 19,500 something. So we're watching this. So if you're looking at putting a trade in, you want to know where we're trading on the daily basis so that when you're looking at your stop losses, because we want to talk about stop losses, you would know that, it's quite possible that we're not going to break this daily line. So you can put your stop loss above it, right? And then if you can't put your stop loss above it because you're going to get liquidated, that's an indication that your leverage is probably too high for the market that we're in, and vice versa. If we get to a candle down at the bottom here and it's looking like it's going to go back up, then you would look at putting your stop loss, what am I trying to say here? Just under here at around just under 30,000 for the bull run. So that's one thing you can do, which is wide stop losses outside the pattern, just under the support line of the pattern if you are longing, and just under the just above the resistance line if you're shorting. So the resistance line in this case would be the top of the triangle on the daily. Some would even go as far as going up to the 100-day moving average here, or whatever moving average happens to be just outside of the pattern, because often we can wick up, touch, come back down. And that happens within seconds. You don't catch it, you're out of the trade, you've lost money, but we're still trading in profit once it's all over, right? So you want to put your stop loss just out there. Now, if you're trading with large sums of money, that can be a bit herum scarum. So the other concept of stop loss is just putting it in at 5% to 8%. But here's the deal. If you've got a 5 to 8% stop loss, if you have a look at the volatility on the hourly, chances are you're going to get stopped out more often than not, right? And at this stage, do we want to talk about the different trading houses?
Yeah, actually, that's a good idea.
Approach to stop lossing?
No, because I think we might need to nickname this like Fake Out June or something. Truthfully, I don't remember a month we've seen so many fake outs, right? So there's definitely lots of people speculating it's market manipulation. It could just be that, we have massive astrological forces at play. We don't know, right? But there is a lot of fake outs. So, I think a couple things to consider. One, personally, I'm moving my stop losses up quickly and I'm being happy I made money, right? Yeah. Because a lot of the trades this month are not hitting the targets and are turning around and going the opposite direction, right? So, you have to decide what your rules are for risk management and at what point do you want to actually shift how you do it, right? But I think it's important to keep in mind, as you mentioned, what's the difference between an A book exchange and a B book exchange, right? And it's basically whether or not the exchange provides the liquidity itself, or whether they get the liquidity from a third-party funding source, right? So for example, Prime XBT as an exchange uses a third-party lender to provide their leverage. So Prime XBT only makes money if you make money. They get a commission on the money you borrow. That would be an example of a B book exchange, right? An A book exchange, and like Bybit and BitMEX are A book exchanges. Some of the exchanges, it's hard to find out whether they're A book or B book. I've been going on their contact us sections to try and ask questions and find out. Some of them don't know the answer, aren't getting back to me, or don't want to say, I don't know which. So at some point in future, we'll probably do a more detailed video on this when we have a little bit more information. But some of the exchanges, when they're an A book exchange, the exchange itself, like Bybit, provides its own funding to provide you leverage. So in fact, when you make money, Bybit loses money, right? So you will notice on the A book exchanges, there's a little bit more volatility. There's more of these really big wicks. And that's because the exchange itself is trading against the traders on the exchange, right? Because they don't want too many people to win too often, or they don't make money as an exchange, which is fair in business, right? But it's important to know which type of exchange you're dealing with. So when you're dealing with an A book exchange, using really tight stop losses, you're actually going to get wicked out way more often, right? But if you're on a B book exchange, using tight stop losses can be a really solid strategy, because especially if you're scalping or you're using really tight trades, it's less risky that the exchange itself is just going to wick down and take your trade out, right? Mm-hmm. So I think it's important to understand the scenario you're under in terms of which type of exchange you're trading on when deciding, are you going to use the really tight stop losses versus are you going to use the really long stop losses? The third scenario I think is really important to consider when you think about whether you use tight stop losses or really wide stop losses is just the fact that we are in a decentralized, deregulated industry here when we're talking cryptocurrency, right? This is the only time there are commodities that can be traded where there is no third-party regulator looking over the shoulders of the traders. Mm. So not only do we know market manipulation is happening, there's no way to stop it, right? So when you think about that, crypto trading is a bit like the Wild West, right? Like there might be a sheriff in town, but the sheriff is basically just the YouTubers that are calling people out. when they do market manipulation, there's no regulatory body that's going to call people out on it, right? So
BitBoy crypto and cryptos are us. Right? They're out sharing things down.
There's some of the really big YouTubers do a really good job of finding out and calling out some of these manipulations. But the reality is, trading crypto means you're accepting a certain amount of that is going on. So using really tight stop losses doesn't necessarily work in terms of risk management. Better to use smaller trades and just know that you are risking the whole trade if your stop loss is just above the liquidation point. So you might only be trading 3% or 5% of your portfolio in any one trade in order to have an effective risk management strategy.
And in this market, low leverage, like, stick to 3x, 5x, 7x, 8x, 10x, depending on how experienced you are, unless it's a really short scalp that you're 100% sure of. And even then, I would go in lower leverage and scale into the higher leverage. I wouldn't go in at 25x. Or more than that, because you could get liquidated or stopped out very quickly in the market that we're in. So we're looking at Bitcoin right now on the hourly, and we can see that we came down. We just went a little bit under this daily triangle. Like drawing your trend lines is always subjective, because some might say, we didn't, that's where the triangle is. But when you're drawing a trend line, guys, you want the most candles touching it for validity. If you've got all these big gaps, then the pattern might not actually be as valid, and your lines might not be as valid as you think they are. So here we are now. Where are we going? What's next? Well, if you look at the Ichimoku on the 1 hour, we are about to potentially have a little bit less support, boom, and we could be coming down trading sideways, boom, and we could be coming down trading sideways, because what we've done is we have just shot through the cloud, right? We're no longer under it, we're over it. So in the next, I would say 5 hours, if we don't see a green here, if we don't all of a sudden start seeing the green Ichimoku cloud like we did back here,
when the cloud flips.
When the cloud flips, then I would say that we are heading down. So that's what we want to monitor. And the best time to short when we're going down is at the top of the pattern. So the best time to short would probably have been up here, or when it touches the pattern here and you've got a confirmed breakdown. If you look at the RSI, we've had a steady climb up. It is already looking at coming down. So we could go up a little bit more and then bounce off of this a bit before coming down. But ultimately, my sense of it is that we've got a little bit longer to go. Yeah. So if we look at further down to go, if we look at my chart on the pickup sticks chart, and I do, hopefully you can see this. I know it is a bit messy, but I'm a visionary and it just really helps me see things a little clearly. I've got the Fibonacci lines in here, and we've got a golden pocket right here that we could come back down to and bounce off of to go back to the top of the triangle, or that's what I would be watching if we are going to break down. So when we're talking about the strategy of not holding your trades open for days and days and days, if you want to be a bit more conservative, you don't have to follow that strategy. You want to be looking at where are the golden pocket places in your Fibonacci. And for those of you who don't know what I'm talking about, you use in TradingView up top left here, come down to Fibonacci retracement, and generally speaking, you would go to the top of the market and the bottom of the market at the very beginning. So way back in April or May 2020, and you'd put your Fibonacci lines in, right? You can also do what I just did, and that's do your Fibonacci at the level of the actual move that we've got right now, or the bigger move. Like, you can just draw many of these to see where all the lines are. And if you go into the tool itself, you just click onto it. I like to go in and put the 0.618 and the 1.618, which is your Fibonacci golden ratios, put that in gold. so that I can see that in the Fibonacci and I know where I'm going. There's a lot of people trade between these lines, right? It's like they'll go, I'm taking profit at the Fibonacci, because usually these are known resistance and support lines, where it makes it really difficult to break out of. Now, in the big move that we've just had, we have a golden pocket sitting at around about 34,233. So if I was shorting this, if I wanted to be conservative, I would probably monitor this and take some profit here, because we could bounce right back up to this line here, the sloping yellow line, because as Teresa pointed out early, we could also be creating a downward wedge, right? We've got a descending wedge. Here's the top line here. Here's the bottom line here, which means that we've just touched it with that CME gap closure, and more than likely we could come down. And whether we bounce off this golden ratio or not, we won't know until we see. But we could also come down here, creating a lower low, and that takes us all the way back down to around about, by the time we get down there, 30,000. For those of you who are in Crypto Ninjas, if you go into the Discord server and you look at all of my technical analysis for all of the coins, you'll see I have a systematic level of where all the retracement levels are and where all of the bull market levels are that we're going to go to as well. And you want to put those in your chart and make a note of that. Really, I think, what do you think, Teresa? One more hour candle to see what direction we're going in? Or, because we could hug. I have seen before where you've hugged the line down and you've gone, dang, 5 hours later, it's still not telling us whether it's going up or down. However, if you'd gotten in, it was just slowly going down, hugging this line, and you could have made money, right?
Yeah. And one of the things that's really interesting, I love the pickup sticks type drawings too, because they're basically saying, here are all the lines all different traders might be paying attention to, right? But one thing to notice right now, that upper support line you have drawn in red is also almost parallel to the edge of the Ichimoku cloud. And so if we do break resistance and go outside of the pattern that we were trading in, that line is probably the next place we're going to hit major resistance, because it's both the edge of the Ichimoku cloud and it's a previous line the market was supporting, right? The other thing, though, that you can see when you have all the different lines drawn in, and it's a little bit harder to see on your drawing here because it's buried by some of your lines, but when you're looking at the Ichimoku, you could not only look at where are the current candles going to hit support resistance, because often we hit support resistance not only at the trend lines, but at the edges of the cloud, both up and down, right? But you can see the lagging indicator is right now hitting one of those support lines, right? So the yellow line that trails behind the Ichimoku, it is a lagging indicator, but if it's hitting support or resistance, then there's good odds that whatever move you're in is going to hit some level of resistance before it continues. So, Ichimoku is just a wealth of information that way. And it's always good to see how it's interacting with all the different support resistance lines in the markets, because that helps give you a better idea of where we might be headed.
Exactly. So I'm tending more bearish than bullish now. I was a little bit bullish this morning, but I hadn't had my cup of tea and I hadn't sat out and zoomed out. When in doubt, zoom out, right? And then when I looked at the CME, I went, oh, this little bull run was nothing but closing the CME gap. And usually we get a little bit of a retracement after that's happening. Then we've touched the top of this pattern here of a descending wedge, which is ultimately bullish, but not before going down and up and down and up a few times over a period of a few days before it ultimately breaks to the upside. So for me, that's another indication we've got a little bit more downward price action to go before an ultimate breakout. And we definitely, wanting to be looking at these pink lines of the triangle, because if we come back down to create another low, this time we're actually breaking further out of this the symmetrical triangle, which is a continuation pattern. We entered into it from the upside, coming down into it, which means it's a continuation of going down. However, it may not be getting those really low numbers that everybody is watching. So as far as a strategy goes, to me, it makes more sense that if you say you short here and then you go boom here, instead of waiting for it to retrace all the way up, and that was 80, if you 10x, that was 85% profit, right? Instead of losing all of that profit as we retrace all the way back up here, to me, in this market, it makes sense that you approach it from the fact that every time we hit a support line, get out, wait till it goes up to a resistance line, or you can long it up to the resistance line and then come back in again, because you would have come back in at the round about the exact same price in this instance, right? But if you'd hold on to it for days and days and days, you lose all of that profit. And then all of a sudden, if it U-turns and goes up, you just turned a winning trade into a losing trade and you've lost money. Does that make sense?
Yeah, really good point. I think when you're in this kind of conflicting indicators, market uncertainty, let's call it fake out June, trying to hold trades open for long periods of time in the long run is probably going to make you a lot less money than trading within the pattern, and just seeing where you get to. Trailing stop losses are your friend this month, I would say.
Definitely. We should do a video on that. So here's Ethereum, and this is contrary. You did do a video on that. Yeah. Teresa's done a video on trailing stop losses in Bybit. So you have a look at our Bybit playlist. And by the way, new guys, love for you to like us, subscribe. We do a live stream of a general market analysis every Wednesday, and impromptu live streams as well. Plus we're uploading videos daily to give tutorials on technical analysis. How do you do technical analysis? What do you need to look out for? That could be scenarios that help you in the determined price action and direction of the market, as well as the mindset component. So we just started talking about mindset, and that the mindset that I think we need to be in right now is don't get greedy and be patient. Would you say so? Like, don't wait for day after day after day when you could get liquidated. Just take the profit where it is. I mean, that's just my opinion. You don't have to do what I'm saying, because I'm not a financial advisor, but I'm hearing a lot of people getting wrecked when they don't need to, because the trade was in profit. You don't, as Da Vinci J says, do not turn a winning trade into a losing trade. Take profit, right? Don't wait for it to retrace and then go into deficit and then you lose some money there. So with Ethereum, we could have a head and shoulders here that might be about to get invalidated. We did a bit of a fake out here. It's come back down. Well, normally, like if Bitcoin didn't look like it was going down, I would say that this is extremely bullish for Ethereum. And I don't know if we're going to see a decoupling from Ethereum here, but generally speaking, if Bitcoin takes a big dump, it takes the entire market with it. Well, not the entire, but most of it. But we've broken out of this symmetrical triangle, you can see. We've come back down to test it. Now, if you were wanting to long this, the conservative approach would be to wait till you get past the 0.5 Fibonacci, which is 50%, and you would put your long in there. And the target would be, this is a head and shoulders, inverse head and shoulders. The target would be here, up at, I'm on XRP. Okay, sorry, everything I just said about Ethereum, boom, I'm on XRP. I'm sorry, this is XRP. It's looking bullish.
I didn't even notice that too.
I did just now, because I went 94 cents. No, that's XRP. I do apologize.
94 cents in Ethereum. That was a few years ago.
Yeah. Now, here's the thing. In order for us to get that bullish scenario, we really need volume to counteract what's going on with Bitcoin. Because again, if Bitcoin goes down, then, the whole market is going to get taken down with it. So this would be a very risky trade. And I'm just watching this one at the moment. Right.
Not to mention there's a couple resistance lines there, a fib line and a resistance line just beneath that target.
Yeah.
So you would not be putting in a take profit at the full target in that case. In my opinion, you would be pulling it tighter, because odds are it's going to turn around before it hits the target when it's looking like that.
Yeah, exactly. There's a lot of resistance between 98 cents all the way up to $1.07 for XRP. So it's going to need volume. And quite frankly, it's going to need Bitcoin pumping as well, unless there's some major news that comes out from the SEC lawsuit, which is due very soon because discovery is almost over, and then there'll be judgment as to whether or not there's enough to proceed with a lawsuit or not, or if there's going to be a settlement. So this is a monitoring the situation. We have also broken to the upside out of this ascending triangle, which is also bullish as well. So these are two bullish patterns here for XRP, but as we said, Bitcoin could take it. So now let's go to Ethereum, which is similar because Ethereum could also be an inverse head and shoulders, which is a bullish pattern inside a rising wedge. But I don't know, would you say that this would be invalidated? I mean, you could say that all of this invalidates this head and shoulders.
I think at this point, yeah, it's looking pretty invalid. Once you've had fake outs in both directions, it's I think we're into a new pattern at this point. Although I think the wedge pattern could still be said to be playing out, which would be more or less the same target as the head and shoulder.
Exactly. Look, the Ichimoku we're right on a steep decline on the Ichimoku, and often this can be where we drop down and we could come down. So once we come down through this pattern, I think for me personally, playing it safe, the safest place to take a short on Ethereum would be right there, unless Bitcoin just starts free falling, in which case, Ethereum's going to go down with it. And if you were, so that, like get out from underneath this line here, because you've got resistance, you've got the support rather here. It's got to go through this EMA ribbon, right? And then it's got to go through this line here. So there's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 places where this could get supported and bounce up to the upside.
And one thing to watch in that trade is if the Ichimoku cloud and the EMA ribbon flip, I would not take the short there, because I think the odds of that being a breakout are going to be a lot greater if we're seeing a bullish Ichimoku and a bullish EMA ribbon flip.
Yeah.
So that would be something to see, and that'll depend on how long it takes to cross that EMA ribbon, right? The longer it takes to cross the ribbon, the more likely we are to see that flip. Yeah. So that would just be something to pay attention to as to what's going on, because I think the bounce would be a lot more likely in those cases then.
Yeah, on the 1 hour, if you are going to short, you want to see nothing but red. If you're going to long, you want to see nothing but green, right? Because as we've seen, this breakout has not it's met with so much resistance. It's been not met with volume or anything like that. So given that this is a bullish pattern, but we've got a whole lot of bearish signals going on in Bitcoin, it's likely that we've got it. And look, the Ichimoku just clicked blue, and then it clicked off again. So it's still deciding, it doesn't know what to do. So that's where I would be looking at a short, and I wouldn't long this unless there was some kind of a breakout here. I would wait until we clear this red candle up there. No, actually, I wouldn't do that even. Because now we're hitting the bottom of the triangle. See, this is the triangle we've broken out of.
Yeah, so this is all the competing indicators in the market.
Yeah. No, I wouldn't long. You would have to wait until you had confirmation that we're going up once you're inside the triangle, heading up that way, right? Yeah. Because we could come back down and we could come back into this triangle and trade up. That's absolutely that's a possibility. But with this Ichimoku cloud being red, there's a lot of resistance for this being bullish. So, and I know a lot of you guys watching are in a short right now. So as far as that's concerned, you're actually looking pretty good. There's no need to jump out right now. I think we've got 1, 2, 3, at least 3 hours of candles to give us an idea of where we're going. And at this stage, it looks like it's got a green candle. It could go back up a little bit. But if it goes up above here, generally speaking, if there's volume, that is an indication that we're going to continue to the upside. Not always, but mostly that is. Excuse me. So if we do break to the upside, the target is going to be halfway through the midway point at around 2746 of the bigger triangle that we are in. So that is something to watch. Has anybody got any questions they want to ask us about that? Fire ahead in the comment section. We went over XRP and now let's have a look at ADA. One of the things that I love about XRP and ADA is that often they do break with the tradition of Bitcoin and Ethereum, except for if the market dumps and Bitcoin's taking everything down with it. However, if Bitcoin is pumping, they don't necessarily pump. But if it's dumping, it definitely follows tradition. But we've got similar contrary stuff going on here with ADA, Cardano, and we've got this ascending triangle, which is a bullish pattern, and we've got a target of $1.94, is it, or is it up into $1.94 up here somewhere? And we everything got taken up when Bitcoin went up. Everything went up. Like there was just all of this excitement. That was Mars energy. Oh, let's just drive this thing up. And then it just did not have enough momentum or volume to sustain it. So it's dumped back down. Not only is it dumped back down, it's come back into the pattern and it's touched the bottom of the pattern and now it's going up. So if you have a look at the where we're at on the hourly, we are at the pinnacle of a breakout. So it's going to have to make a decision which direction it's going in. And I think that obviously, you know, Bitcoin or specifically Ethereum is going to determine this. So I would be looking for a trade. I would be waiting. You've got the EMA ribbon there. I would be waiting on the 1 hour till it clears the EMA ribbon there to short it. Or again, we come up over 165 with volume before you long it, because if you do and you see the green cloud, because while we're in red, this is an indication there's a lot of resistance and it could just roll over. You could get into a long, like here, you could have gone, oh, it's going up, let me jump in, and then boom, it rolls over. That's what happens when you're in a red Ichimoku cloud. It's very risky longing when we've got red Ichimoku cloud. So bottom line is, guys, I think we head down. I think we've got further downward price action. What do you reckon?
Yeah, or sideways.
Or sideways consolidation, yeah.
You know, normally when we're at the end of a pattern like this, we don't see sideways, but we've just had a fake out down and a fake out up. So, you know, we could see several hours of sideways and everybody's like, what's going on, right? But in this case, you know, if we see sideways, I think that means we're going down. Like, so if we go sideways out of the pattern, given that the Ichimoku cloud's red, given what the fact that the lagging indicator would be bouncing off the EMA ribbon, you know, I think there's good odds that that's heading us downward.
Yeah, you also want to look at the conversion line. I've got my conversion line in blue and the baseline in green, because at the moment, right here, they look like they're about to cross.
Yeah,
which
good point.
That we could
which would be a bullish cross. Yeah.
And that I think has already happened or is happening. On the, no, it's about to happen on XRP, right? So, and when that cross starts to happen, you start to see a green cloud, like green at the end of the tunnel. My sense of it is I think we might dump tonight or tomorrow, going into Friday, Saturday, and then start seeing upward price action on Sunday. That is my sense of it. And, you know, don't take that to the bank. Just use that as piece of information that you put in your pipe and smoke. I'm just looking at the crosses here. We don't have a cross here, so we're still looking bearish on the Ichimoku here for Ethereum. And
remember, on an Ichimoku, when you get the bullish cross or the bearish cross, you're normally trading that in combination with all the other things. So when the cloud is bearish and you get a bullish cross, you know, normally if you're doing a more conservative risk management, you would not take that trade. You would take the bullish cross when the cloud has already flipped into the bullish sign and the lagging indicator isn't hitting any resistance, you know, which can be a sign that you're going to end up going sideways or even correct before you go up.
Here are the indicators that I'm using, guys. Cracking cryptocurrency Ichimoku, because it is already configured for the cryptocurrency market, which trades 24/7.
Yes,
I'm using
big shout out to Cracking Cryptocurrency.
Yeah.
They have some awesome indicators. We highly recommend their site.
Yeah, they have lots of good indicators. EMA ribbon, that's the old Ichimoku cloud I was using, which I don't use anymore. The relative strength index, the stochastic RSI, support resistance dynamic, that's this one with all the blue dotted lines and these known zones of resistance and support. Trend master, the free version, and then volume oscillator. So I think that's it. So I think one last thing to just go over is mindset right now. And we did say that, you know, one of the things that I'm practicing is patience, discipline, and most importantly, not getting greedy. Like just looking at taking the profit where it is, and then, you know, being a bit more conservative with the trades, and that way you don't lose much of your capital, right? And hopefully you don't lose any of your capital, rather than having the mindset of feeling very safe or feeling very secure that the market is going down and then leaving the trade open for days and days and days and days. I think as an experienced trader who's got a lot of money behind them and who's trading profit now, they're not trading their own capital, they can take those kind of risks. But if you're trading your capital, you're risking capital. Whereas a lot of these traders that are on YouTube, they're not trading capital anymore. Their capital's out of the market. They're trading profit. And so they can afford to lose $1 million. You know, you hear BitBoy Crypto, oh, I've lost $4 million. And it's like, yeah, but then most of that's profit. Like, you know, might not all be. Same with MM Crypto and Carl. They've made so much profit, they can take these bigger risks. But if you've borrowed money, if you've got your grandmother's savings, if you're leveraging through using the bank to bankroll you, that's a debt that you've got to pay back. You don't want to be taking those really risky long trades. You want to be getting in and out of them. Like, for example, if you got, let's just have a look at Bitcoin here. If you got in here and you shorted this all the way down and you took profit, right? That would, that you've got some money, and then you take that profit and then you long it all the way up to the top of the pattern and you've got some money. If you then came down here and you shorted and you came down here and you took some profit, then you've got some money. And then if you longed it up here and took it out here, you've got some money. If you held it open, you came in at 40,429, you lost all of this profit because you didn't take any, and then you come back here at 36,500, you're probably only about 20% in profit. Meanwhile, this was 80% profit. This was an 80% profit on a 10x leverage. And you could have had all that money. Does that make sense?
Yeah, it's a really, really good point. And I think one of the things that's really important to look at when you're talking about mindset is start journaling and noticing, when do you trip yourself up?
Yeah.
Right? Because everybody has different patterns. Mine is when I have a losing trade, usually there is a period after which I make bad decisions. Like I convince myself the market's doing things that it's not doing. That's my inner dialogue, right? So I created a trading rule of myself that, and by losing trade, I mean, like, because sometimes you enter into a trade and you just don't make profit. Like, you know, you get to the point where you've moved the stop loss up to profit. I consider that a neutral trade, right? Mm-hmm. But a losing trade is where you went in and it literally went the opposite direction. And, you know, maybe you've lost a few hundred or a few thousand, depending on the level you're trading, right? When I have a losing trade, I don't trade for the rest of that day now. I created that rule for myself because I need to get my mindset settled again, that I'm starting to, you know, properly watch the indicators, do proper risk management, because I find it's in that window right after the trade. And this is just me. I'm not saying this is you, but everybody's got patterns. And you got to start noticing your own psychology and when you tend to fail in your trading, and then create rules that stop you from doing that. Otherwise, that becomes more like gambling addiction. than actual responsible risk managed trading, right? And I use gambling addiction as like, that's sort of the extreme on the pendulum side, right? But it's easy to get sucked into, right? If you've ever gone into a casino and had fun for a night, you realize how easy it gets sucked into that mindset that when you win, you don't want to walk away with your winnings. You want to keep playing. And when you lose, you want to make the money back, right? There is a human psychology that we get sucked into when it comes to anything dealing with playing a game around money. And if you don't learn to override your natural human tendencies that tend to trip you up inside that game, you will never get a highly successful trader mindset. So start journaling. How are you tripping yourself up? When do you tend to lose? Is it that when you have a losing trade, you tend to make stupid mistakes afterwards? Is it that you don't take profit when you should, and you hang on to the trade too long, or you don't move your stop loss up effectively? Just notice what are the patterns that you're doing that are causing you to either not take profit when you should or lose money, and then start creating rules for yourself that stop that from happening.
Yeah. And I think the other part of that mindset too, Teresa, is that if whatever you play out when you trade, like whatever your patterns are, whatever your self-sabotage patterns are, you're probably playing that out in some other area of your life. So if you deal with it in your trading and you know, like for example, if you're not disciplined in your life, you're probably not going to be disciplined in your trading. And if you're not patient in your life, you're probably not going to be patient in your trading. So as you develop those traits of patience and discipline, that's going to leak out into other areas of your life and improve your life at the same time. And I think that where a lot of new traders, particularly I see, have a mindset of trying to make back your losses really fast, I think that is a self-sabotage mindset. You want to be patient about making those losses up. Now, if you've taken money out from the bank, then obviously you're in a little bit of a desperation because you've got to pay that back, right? But that's all the more reason that you wouldn't be trading all of the money you borrowed from the bank. You would have maybe 25% to 50% of it. Even I would have 50% of it in a hodl position. So the capital gain on the hodl will outweigh any losses on the trading, and you wouldn't trade all of it, especially if you don't know what you're doing. So having that mindset of it's going to be okay, I've got time, I'm patient, I don't have to make my losses back today, that's ironically, that's going to save you a lot of losses. Because if you go, I'm going to double, this is the number one mistake you told me about, Teresa, right? Number one mistake is you lose your money, so you double up your position in the next one to try and make all that money back in one trade. That's a recipe for getting wrecked and losing all of your capital and having nothing to trade with on another sunny day. So we just want to be patient. We've got plenty of time. There's plenty of opportunities. The market's always giving us great opportunities for increasing your crypto and for making, what it is that you need to make. So don't be in a hurry and don't be in a rush, because if you are, that's a recipe for you making a decision that will get you wrecked.
Yeah, I love that you talk about how this could be happening everywhere in your life, right? Like, have you ever tried to fix your life partner's emotions, right? Like maybe your life partner's sad or upset and you're trying to fix it instead of just be with it and honor that they have an emotional process they need to go through. It's similar. Like, don't try and fix your trading.
Yeah.
Right? Like if something goes off, clean the slate and start fresh. Don't try and fix something that happened. Right? So
learn from it. Just
learn
from it and get better.
Clean the slate, learn from it. Maybe you need new rules, but don't go back and try and fix what just happened, because it's that mindset that's going to dig you into a hole.
Yeah. Yeah. And I can't remember who it was that said this. I just cannot remember, but one of the YouTubers was saying that when you first start trading crypto with leverage, you are going to lose 90% of your trades. Most people lose for 6 months. So if you're going to lose 90% of your trades, you don't want to be trading with 100% of your crypto, right? Yeah, you want to be trading with 10%.
Lang on the blockchain today that was talking about that new traders tend to lose a lot. So if that's you, it's okay. It's like you're going to be okay, right? Because this is a skill, and 80% of the skill you're trying to learn is mindset, not technical analysis.
Yeah.
Right? Like, how often do you look at a trade and you're like, that should have been a winning trade. That should have been a winning trade. And I screwed it up, right? That's it. It's mindset, right? And a lot of it is, how much are you beating yourself up in your trading, right? If you're beating yourself up a lot, that's not a recipe for success, right? Because if you had a winning trade and you got out at $300 profit and you could have made $3,000 profit and you're a new trader, go celebrate.
That's great. That's a really good.
You made a good decision and you took profit, right? And next time you'll know you could have hung on to that trade longer, but don't beat yourself up for the money that you didn't make.
Yeah,
that's not going to help you.
Greed. You know, that's the final thing on mindset, is just don't get greedy in a market like this. Like, because you'll just make bad decisions. Like I just showed you with this example, right? You could have had all of this profit if you got an in and out all the way up and down this pattern. Whereas if you left it open, you'd only be sitting on 10-20% profit right now, and you would have lost out on the 80% that was here and the 80% that was there. So don't hold on hoping it's going to go lower in a short, or hold on hoping it's going to go higher in a long, because the technicals, if the technicals aren't showing that that's what's going to happen, you do not want to trade on hope, right? You want to trade on good, solid technical analysis, and you use your mindset to direct that analysis into profit for you, and then just get over the losses really quickly, because it's going to happen. And adjust, keep your position size to 3 to 5% if you're beginning. And when you get more experience and you've proven that you can make money consistently, or crypto consistently, then you can up the game and you can up the leverage. But if you are in a hurry to make a lot of money, that's probably the point. That's what you've got to look at, right? Maybe this isn't the right forum for you to get the funds that you need if you're in an emergency and you need to pay bills, or you've got a loan that you've got to pay back. You might need to go out and get a part-time job, or have a business where you're working at as well, until you start becoming really profitable with your trades. Because if you've got the pressure of trying to get money together for your livelihood and to pay off debts, that's not going to help make really good trading decisions, because your decisions will be based on desperation and a little bit of greed and a little bit of speed, right? Needing it to happen fast. And the market sometimes can be very slow to return.
Yeah, we had a really great expression when I used to race cars. We used to have a great expression on the racetrack. And it was, sometimes you got to know when to slow down in order to speed up. What they meant by that is, knowing when to brake is usually one of the most important skills to winning a car race, or any race for that matter, right? And trading's a lot like that, right? Like knowing when to be patient, knowing when to slow down, knowing when to take profit or get out of a trade, because we're in high market uncertainty, actually has you win the race a lot faster. So I think that's one of the biggest expressions. The short form of it is, you got to slow down to speed up. You got to slow down to speed up. You got to slow down to speed up. Right?
Yeah. So just to finish off on Bitcoin, I'm going to go back to the 1 hour, because it looks like we've gone up a little bit. Yeah, we've got a green candle here. So then this might not be a bull pennant. This could actually be a bull flag forming. Now remember, if you long this is highly risky, because we're in a red Ichimoku cloud. We've got the RSI is bouncing off the top here at 75%. So we're due for a correction any moment now, right? We could come back down and touch this flag here and go back up from there. But this is a really risky long. So guys, thanks so much for listening. You'll be hearing from more of us. At this stage, we're gonna head on out and let you know what's going on in our Crypto Ninjas VIP mastermind, which is a mastermind where we have daily technical analysis. Everybody is learning how to do technical analysis in that mastermind, as well as sounding off their charts and technical analysis. We're looking at signals, and then we get together on Zoom 4 times a month to learn more technical analysis and compare trades and look at altcoins to buy and sell. And if you're interested in that, the link for that is below in the description. Do you want to talk about your scenarios group that you have as well?
We have a mastermind. We meet twice monthly, and we get volunteers to dive into specific scenarios, just diving back into the charts and really studying specific scenarios, like CME gaps, or like looking at Mercury retrogrades and how does that affect the price action. So if you'd like to become part of our Scenario Champions Mastermind, we're specifically focusing on Bitcoin right now. Feel free to reach out on the Contact Us section of our YouTube channel. We would love to have you join the group if you're interested in helping us. And do we want to talk about our event coming up?
Yeah, we're going to be releasing early bird specials for our subscriber. We're having a big event in September live on YouTube. It's going to be 3 days of workshops on technical analysis, trading, minimizing your tax burden, going offshore with your trading in crypto, if that's something you want to be looking at. We're going to be doing quite a lot on managing your emotions and mindset. And we've got people like Crypto, Da Vinci J, 15, Jeroen from the Blockchain Today, Marzel Money, Alex from Marzel Money, to name a few. We're in the process of talking to George of Cryptos Are Us, BitBoy, Ivan on Tech. So some of the really big guys that we've reached out to, and some of them have said yes already, and the others we're still going to get hold of. But this is going to be an amazing 3 days. It's going to be super cheap to attend, and early bird special tickets will go onto the market at the beginning of next week for our subscribers. So you better subscribe.
It's super fun. We're going to have a blast. So yeah. Come and find out the straight scoop on all your favorite YouTubers.
Awesome, guys. Yeah, because the whole concept of it is they're going to be able to tell you what they can't tell you on YouTube because of obvious reasons. So, so that's it from us, guys. It's over and out, and we'll see you next Wednesday. We are uploading videos daily, and we go live impromptu throughout the week, but we definitely show up at 2 o'clock US Mountain Time every Wednesday. Bye, guys.
Thanks for joining us, guys. We'll see you next time.